Welcome back to another Aitx video. We are sitting at 0039. If 004s does not hold, which is looking likely, it's looking likely. If it doesn't hold, we'll go to 002s, 003s, and that's where I will add the other 5K that I've been holding onto. I want to add 10K total. Last time I only added a couple K. Now I'm looking to go the usual 10K. I usually like to go with 10K, especially if I trust the company, the CEO, the people behind it, and the PR process more than anything. Because the PRs are important. Without PRs, stocks don't really go anywhere but down, especially penny stocks. So what I am waiting for at this point is to see if it comes down to 002s, 003, so I can add that 5K, add that big position, and then I'm just going to sit, and that's it. I'm not adding anymore. I'm kind of done at that point with the technicals. I'm done with adding positions. What is the PR? We got a PR today. One that's very juicy actually, because you have to think about it. Aitx Red receives multiple RIO contract renewal from large clients. Why, do we really need contract renewal PRs? That's something that crossed my mind when I read that headline. I'm like, you know, I don't think it matters unless, because if they're just renewing, then we is that really gonna increase the amount of money the company makes? Unless they're renewing and getting like some more reels with that contract renewal, then I guess it makes sense. Is pleased to announce the first of many expected contract renewals from one of RAD's largest clients. This first renewal is for 2 real units deployed last year. So they only have 2 real units, and that's it. Like, I'm trying to read into this. This client who already has many real units deployed continues to expand their use of RAD's. How many though? You're not giving us a number. They continue to expand their use of RAD's innovative security solutions. Okay, how so? How many more units? If they're just renewing the 2 units that they already had, aren't they just going to bring in the same money that they were bringing in last year from last year's contract? That's what I'm thinking in my head right now. Could be wrong. Someone correct me. This is our first renewal specific press release. Yeah, they've never done this before, which is why I was confused. I'm like, what do I care about renewals if it's just going to be the same amount of money? If I buy Amazon Prime and then I renew next year, the company is only making that same amount of money unless they raised prices. So, for example, if I paid $100 for a year of Amazon Prime this year, and then next year I pay 120. I renewed it, yes, but the company actually got $20 more out of me. So, but if it's just the same 100, then it doesn't really change anything because it's still the same amount that the company is getting from me at that point. So there's no these renewal specific press releases. I don't know about these. They have to be significant. Like, hey, they renewed 2 units and they're adding 10 more, or now we're charging them more because they've upgraded to the newest tech or whatever the case may be. Then it might be worth it to release these renewal specific press releases. Hopefully you get what I'm trying to say here. However, we have hundreds of devices that have been renewed over the years. Well, of course, the devices are great, they're renewing them, but again, do those renewals come with more money in the bank? Or is it just the same amount? Or do they actually pay less depending on what the deal is? So we don't know that stuff, unfortunately. In fact, our year to date attrition, specifically customer cancellations, is less than 3% of total deployed and revenue producing units. Less than 3%, that's a nice number. That's a number I'll keep in mind. Since our target is to limit attrition to less than 5% per quarter, we are overperforming exactly what our team strive to do. And this is probably the more important part of the PR. They will be providing a year-to-date sales roll-up on August 1st, 2024. I wonder if they're going to release it in the morning or after close, as well as provide full-year SaaS and revenue guidance. And that's about it. I think from here, it's just rinse and repeat. Yep, they just rinse and repeat from there. So the biggest takeaway is August 1st, but also the attrition rate of less than 3%. That's good to know. That's good to know for probably the biggest reason why knowing this number is important, the 3%. This is why I made a video today on Aitx. Knowing that it's less than 3% means that the majority of units they deploy, they're making money. And so out of 100 units, 3 units get canceled, essentially. That's actually really good. But in the future, if the attrition rate becomes higher, let's say next year the attrition rate increases to 10%, well, something's going wrong. Something's not right. If there's suddenly an increase from 3% to 10% in attrition rate. So that's why I'm saying this is a good number to keep. I'm going to keep that number. I'm going to write that number down. Where is my notes section? That is a good number to. Thank you. I love numbers. I wish they would give us more numbers, but yeah. So attrition rate less than 3% as of what? Let's just say 7:30, 2024. Well, it is 7:30, 2024. I can see it down here. What is wrong with me? I just guessed. I'm like, I think it's the 30th. So wait, yeah, okay. So they're overperforming. So if it does go above 5% per quarter, then they would consider themselves underperforming. Okay, good to know. Thank you for the numbers. If you could give us more numbers, that'd be great. The first renewal is for 2 real units deployed last year. I wonder how many units though. Like they don't tell us how many units and how much more money are you bringing in because of the renewals. Did they upgrade to new ones, or like I would like more information. Uh, I don't know if they'll ever give us more information though. I'll stop there. I don't think I need to go on and on. You guys know what I think. August 1st, it's going to be the first numbers released that could give us a clue into what's coming in the future. Oh, wait, yeah, before I go, there was something that I was looking at on TradingView financials for Aitx. I was curious about the liabilities. We know they have a horrible assets to liabilities. So I wanted to look a little deeper into it. And what caught my attention here, balance sheet. So we know their liabilities are absolutely skyrocketing year over year. But when I looked a little deeper here, their short-term debt from 2021 to 2022 increased almost 10 million, so almost a 10x. Not quite, but you know, if we're rounding a little bit, about a 7x. Okay, let's just go with 7x. But then it increased by 3 million in the quarter after that, not quarter, in the year after that in 2023. So I'm curious about that short-term debt. Is that how much is that going to increase from 13 million to 20 million? So that's something to keep an eye on. Those short-term liabilities, and their accounts payable is sitting at 2 million, an increase from 1.34 to 2 million. And where's the other one? Oh yeah, total equity doesn't even matter. Total equity negative 40 million. So if the company were to liquidate everything, you're not getting anything. Period. You might owe them. Yeah, you might owe them money. Another thing, long-term debt has increased. Let me see. Long-term debt has increased from 21 to 16 to 15.69. Increased is the wrong word though. It's decreased actually year over year. So we'll see if they continue to tackle this long-term debt because I know they want to trade clean at some point. That long-term debt has been going down. I know I rarely look deeper than just liabilities bigger than assets. Well, that's garbage. But when I look a little deeper, you see their long-term debt has been going down. So hopefully this has been a trend since 2021. So this has my attention now. I'm hoping that as the years go by, we bring that long-term debt from this was 21 in 2021, and then it's 16.50 million in 2022, and now it's 15.69. So if they can start knocking that down to under 10 million in this coming year and the next, that would be great. That would be a positive trend to the. Well, yeah, we need a positive trend here. With the liabilities, you got to start knocking those down one way or another. And what else? The assets. Of course, I looked at the assets. I'm like, let's see what's going on with assets. Besides just pointing at it and going, "Oh my God, the liabilities are horrible." I was looking at where's the receivables? I hate when I can't see. Where is it? There it is. Total inventory as well. You'll notice the inventory from 2020 to 2023. They only had 64K in inventory in 2020, 1.53 million. What an increase. That is one, that's a big jump, my friends. And then that went up to 1.64, then 2.13. So it seems every year they have more inventory. That makes sense, right? If your company is growing and you're selling more product, or in this case, leasing out more product and all these contracts for your robots, you would expect your inventory to increase as the years go by. So that's a positive there. Again, I'm looking a little deeper than I normally do because it caught my attention. Inventory did decrease though from Q4 23 to Q1 2024 from 2.13 to 1.83. Again, not a big deal. Not this isn't anything that's gonna. It would be concerning if it dropped to like 10K. Like, wait, what? Why was there such a massive drop in total inventory? So we're not concerned here about that. Total receivables 616.46K that they will receive in the future. We'll see if that number increases as we go by. Because if we look at the previous year for comparison, it was at 287.20. Wait, no, that's the wrong one. It was at 391K, actually came down to 260, then jumped up to 505K, and then 756K. So by the looks of it, the first Q tends to be pretty weak in terms of total receivables. But then as the quarters go by, we eventually have an increase. In this case, from 391 to 756. That's a good thing, right? You always want to see that you're going to receive more money in the future because you're just getting that much more product out there. So I think that's it. Those are the only numbers that caught my attention. But yeah, as long as they're knocking down that long-term debt and you see their receivables increasing, especially in the coming quarters, among other things, I mean, we can go over net property plant. That's been increasing as well. But I don't think that's relevant to the big picture unless they make some big acquisition. Then maybe. But they haven't done it. Do any of you guys know when they've done a big acquisition? I don't think, as far as I can remember, I don't think they've done a big acquisition at any point in the past 3 years. Maybe they have, but I don't recall. But let me know if they've done an acquisition. I wonder if they ever will do an acquisition. It would hurt short term because they would dilute for it, but to raise the money to make the acquisition happen. But it is what it is. That's kind of the name of the game with penny stocks, and that is it for the video. I didn't want to go on too long. Watch for a close today. See if it closes above 004. If not, we are seeing the 002s that I keep calling for, and I am excited. I've been waiting for a while now for 002s, and that's it for the video. I'll see you in the next one. Don't forget to like and subscribe.